Gold holders and buyers, are you starting to get excited? With the Federal Reserve's next policy meeting less than 30 days away, will we see America's first rate cut in more than 4 years? If you're not excited yet, let's take a look at what analysts think it could mean for gold. Before we begin, remember to like this video and subscribe for more economic updates. Last Friday, Fed Chair Jerome Powell finally said the words that consumers and investors have been waiting to hear since July 2023, when the central bank raised interest rates to their highest level in 23 years. During his widely anticipated speech delivered at the annual Economic Policy Symposium in Jackson Hole, Wyoming, Powell announced, "The time has come for policy to adjust." In the wake of that declaration, a number of strategists are expressing confidence in the outlook for gold. Over the last 2.5 years, gold has demonstrated exceptional resilience in the face of the fastest cycle of interest rate increases in 4 decades. One of the professional observers duly impressed by gold's ability to stand tall over this period is Kevin Grady, president of Phoenix Futures and Options, who in the wake of Powell's speech marveled, "Gold has been steady holding up the whole time, even with all these Fed meetings where you're getting no rate cut." In fact, since the Fed finished jacking up interest rates by 525 basis points more than a year ago, there have been 8 meetings that ended with no relief. Gold has done more than merely hold up during the aggressive rate tightening cycle. From March 17, 2022, the day of the Fed's first rate hike, through the end of last week, gold was among the best performing assets over that period. As for why gold has managed to thrive despite the adverse rate environment, numerous analysts say it comes down to what is perhaps investors' single greatest concern: uncertainty. Strategists suggest high levels of economic, fiscal, and geopolitical uncertainty have conspired to drive investors at all levels, including many of the world's central banks, to seek refuge in an asset with a long reputation as a safe haven and store of value. Now, with a sign from Fed Chair Powell that interest rates may be poised to start dropping, many analysts believe the path to a potentially even brighter future for gold could be getting clearer. As Kevin Grady of Phoenix Futures and Options said, "I think right now the time is prime for gold. It's like the perfect storm in a positive way for gold, so I think you're going to be seeing higher prices." In fact, several high-profile strategists suggest the onset of a metals-favorable rate environment potentially could exert a significant impact on gold. For example, legendary gold analyst George Milling Stanley projected gold could reach as high as $2,700 per ounce by the end of this year if a tailwind for precious metals develops on the strength of rate cuts. In fact, some analysts seem to expect $3,000 per ounce gold. Mike McGlone of Bloomberg Intelligence recently said that, in his opinion, it is, quote, "just a matter of time." And Frank Holmes of U.S. Global Investors said $3,000 is pretty simple over the next 12 months, going as far as to call the achievement of that price target in the next year a, quote, "non-event." So now that you know what analysts think, I'm going to ask you again. Gold holders and buyers, are you starting to get excited? Until next time.